Hi guys, this is the second part of analyzing Cakebox as a possible good investment opportunity. In this video, I will continue the analysis with evaluating the business and its management's quality, and later I will also point out a red flag and the possible risk about the company. And at the end, I give you some final verdict, what I think, all in all, about that investment opportunity. So, as I said, let's move on by evaluating the business and the management's quality. I built up a basic scheme for that. We will check a few very important metrics uh, to to do that evaluation. Firstly about some numbers, the historical sales and profit. The revenue increased on average every year 36% in the past 5 years. This is very impressive. It's a growth company, no doubt about that. However, on the other side, the earnings per share only increased by 5% on average in the past 5 years, which brings a few questions, like why they cannot increase their profit the same amount or close to their revenue growth. It's mostly because of the investment cycle. They are investing in the business, they are investing for growth. Mm, Soon uh, it should pick up the earnings per share growth. If it's still not picking up on average, then there can be some trouble. However, for example, the last year's earnings, not 2023, but 2022 was much higher, and in this year they had really big issues with the electricity bills because of the Russia-Ukraine war, and massive inflation was hitting the consumers, so they had less income to spend on discretionary items, and buying cakes is especially discretionary item. uh, if you don't have that amount of money, you are buying less cake or smaller cake. But then let's move on to the balance sheet. It's really strong. It's a clean balance sheet. As I was saying before, they have more cash than debt. Very There is no leverage basically because of that, and the quick ratio is also really great, almost free. It means that they can pay three times their current liabilities with their current assets, which is a really good ratio. It means that the company is solvent. And a bit about the quality of the equity. So that equity, what are on the books, it's real. The goodwill, they don't have any goodwill. The company is 0% of the total assets. Inventory is only 10% of the total assets because it's a very pretty much capital light business, as they are as it's a franchise business. About the business environment shortly, in that cake selling business, it's not really any structural headwinds or tailwinds. People will always buy sweets for special occasions, or just to have a small cake for themselves. Nothing special, good or bad about that. And lastly, about the moat, is there any moat in this business? I don't think that there is any moat which is a problem, or how to say, it decreases the margin of safety to invest in that business. If you think about it, there is uh, none of these mode types are true for the company. Maybe the first mover advantage. There is no such other big brand selling cakes, but there are sweet shops you can buy them, or you can buy at Tesco or all that kind of shops, big supermarkets. I don't think it's a big advantage, and other than that, um, the others are also not really true for that company. And then let's move on to the management, which is the most qualitative evaluation. Firstly, about the length of tenure, the CEO is with the company since its foundation. He was basically the one who founded the company, Shuk Shamdal. He founded the company in 2008 as he didn't find an egg-free cake. Um, for some family occasion, and the cake box is actually selling all of the cakes are egg free. And the CFO is pretty new. A little bit more detail about that later. There is a reason why a new CFO came, and it's actually a good thing. So that CFO is more fitting to the company's current size than the previous CFO. However, about the other reason a bit later. Insider ownership is a really important metric for management. It's good when there is a skin in the game, and the CEO has a quite big amount of share. He owns 1/4 of the company, which is a good thing. So he really will probably act like as a real owner, not just some businessman and the person who wants to be there for a few years and move higher or move to another company. And a return on invested capital, it's a very important metric, and it measures the quality of the management and their decisions about how they invest in the company. On 5-year average, it's 30.6%, which is really, really impressive. The market average in the US is around 9 and 10%. This is 3 times more than that. Um, a little bit about the capital allocation. Mm, the company didn't do any buybacks since its IPO, and no significant mergers and acquisitions. They can grow by organically, and which I pretty much like that they do not merging and acquiring a lot of different companies. No, they can grow by themselves, slow and steady. And the dividends, they are steadily increasing their dividends. It was a massive growth, as I was previously showing. Debt repayments are not necessary as they already have always had a conservative balance sheet with the net cash positions. The main strategy and goal currently is to have 400 stores, so double their store number, and to focus on efficient franchises because they have a lot of different franchisor or owner of some franchise is in that big franchise. So some of the people have just one shop, another ones have two, some have like multiple ones, and they would like to increase the effort on the efficient franchises, and with that increase their also the parent company's income. And of course they want to concentrate on data driven marketing. That sounds like just a phrase, but they have actually good results in that. So they introduced a new CRM system just a few months ago, like half a year ago, and they increased the marketing subscriptions by almost 50% since between May and September, and the SMS subscriptions from 0 to 80,000 people or customer. So this is a nice growth. And look at the online sales difference. It's much higher, 20% higher, around 20% higher probably. It's not a really nice chart, but it can assume it's around 20% higher compared to the previous 2 years, financial year 2022 and 2023, and this is the 2024. So it's a big difference. We can already see some results of it, so it's not just a phrase that they will be data driven. It has some results. And also, if you see the big picture, uh, from in 2018, the online sales, from the French of the total franchise sales was 10.7%. In 2023, it increased to 20.8%, which is double, and it's a nice, really nice growth. And lastly, let's speak about a very important aspect of the company and the risk. So they had a big scandal in 2022, a big accounting scandal, which resulted that the auditor and the CFO both resigned. So let's check that scandal. It was a very big scandal. They had a lot of problems with accounting, and I actually it's a good advice when you're analyzing a company. Write it in Google, the company name and the scandal, error, accounting error, or some combination of those, or it can be legal issues, and you would be surprised how many things you can find about the company. I mean, most most of the time, every company has some legal issues, especially if a company is bigger. But this case, it's very important, interesting for Cakebox, just to see. It was a very long article I found, and the stock market also punished the company with 30% drawdown in a few days in 2022. Let's check just a few errors what they made, and that mess what they were doing called as accounting in 2022. So, like, for example, in that case, the annual report showed different tax expense uh, between certain periods for the same period, and the cash flow statement just included basically an extra 2 million entry. No one knows how it came there. There were a lot of things like that, and maybe the strongest is when they restated the previous year's sales uh, as lower in the later annual report. So as you can see, in 2020 they stated 833,180 in the books, and in 2021 they stated in the annual report 498,000 for the same period. And it's like, what is going on? It was crazy, a lot of errors, and obviously the CFO needed to resign, uh, and the main auditor resigned because of that big issues. So yes, you can check that out. Keep in mind that they had previously such an issue and such a big error. It can happen again, you never know. However, they hired a new CEO who is much more experienced than the previous one, and they are concentrating more on the audit. It is visible in the yearly, the newest annual reports. So they want to improve in that. We will see. The new CFO His name is Mike Botta. He had a lot of experience in franchise businesses, especially at Domino's Pizza. He started there as a group financial controller and then became a company director and the commercial director. And later he was a CFO of MSG Group, which is a part of Domino's Pizza, and they are the franchise managers of a lot of Domino's Pizza in the UK and Ireland. So he has experience both in franchises and how to manage franchise systems, and a lot of experience about the United Kingdom and Ireland, which is crucial. And he was a controller before uh, at Blockbuster and Domino's Pizza, which is also very useful as the company had serious controlling issues. So to just wrap it up shortly, Kickbox is a great growing business. They have nice assets, and the company can be a multi-bagger as it's a capital light franchise business. There can be a big potential runway if they grow as according to their plan in the UK, and later, who knows, maybe internationally. So there is a big potential runway. However, there are uh, some red flags and problems, especially with that accounting scandal which just happened last year. So keep in mind of that. Anyways, I think Cakebox is a great opportunity. The share price has the potential to be a multi-bagger with that franchising. I like what I see in the company. The only things which scares me a bit that last year's accounting issue. However, they did quite some improvement regarding audit, and they highlighted that in the annual reports also. So maybe that issue is not already not there. I really hope it's not there. And if it's not there and the earnings are like that, it's growing nice. It's a nice opportunity to invest in. Thank you for your attention. That was the end of the analysis of Cakebox. And see you in the next video.